Hi there, traders. Brad Gilbert here, back by popular demand. All right, now let's just get into a bit of a weekly wrap-up here, see what's going on. Now, if you're looking at the screens or if you're just sort of tuning into the video, dollar yen is the big mover. Okay, it's up 0.58%, or the yen itself. We've seen a significant move. If you just look across the various news-wise, right, this is usually confirmed by the market participants. So, you know, companies like Metastock, Reuters, Bloomberg, they start calling around the bankers and see if there's any sign or confirmation of the BoJ. At this stage, it's likely due to intervention. So just be aware of that. And when the BoJ intervenes, now this is the most illiquid part of the week. What they're doing is the BoJ doesn't have a huge amount of cash, so they're trying to get bang for their buck. But it doesn't. This is pointless, and this is what they've done. I mean, they haven't done it for quite some time, but since I've been in the market since 1990, they used to do it a lot. Is come in, it's a bit of shock and awe. But once they stop, it goes back to exactly where it is. Everyone's always suggested, and I know the Japanese behave differently as far as looking after their economies and things and currencies, but this is a great situation for them. I'd say it's a political stunt. They can't be seen to be supporting a depreciating yen, which makes Japan once again competitive globally, especially with China. So anyway, the dollar yen's off a couple of 100 points. If I just come across to the charts, we'll just have a quick look at that, and then I can get into what's we've got to look for the week. Now, just having a quick look across the sort of global markets here. The dollar index, okay, it's come down to test support. Euro still sort of mid-range. As you can see, gold sort of rattling a bit. You know, the uncertainty, bit of a rush to the safe haven. So gold's having a bit of a good run of it. Dollar oil's hardly moved. Getting the Dow Jones futures up. Nasdaq, well, finished a little bit higher, so just above resistance. Once again, we're into the fourth week of the month. So the strong dollar that we've been seeing all month, or especially all last week, especially as you come into that last week of the month, it starts to dissipate because we've got another week to wait before we get into the non-farm payrolls. Then you get, you know, CPI numbers and all these sorts of things, specifically out of the US. So the US dollar is having a breather, and we might see it turn around a little bit this week. And there's some data to keep an eye on. But if I just come back down here to the currencies, I should say, so as you can see here, it's a dog's breakfast, the dollar yen. If it's not backed up, like intervention one-off is an absolute disaster, right? I would expect it to go back exactly where it was before the intervention. Now, what you can see across the board, get the dollar index, as I said, just sitting on support. See dollar Swiss just testing that support level. You've got an intermediate, like a weaker resistance line here on euro, which is just taking out a few stops. But the main resistance is on euro is up around 99.50 or just above. We're coming into a bit of a geopolitical situation in the UK as well, on top of what the Japanese or the BoJ are doing. And this is what you generally get. You get blowouts to the downside, blowouts to the top side. Obviously, Truss is she's no longer the PM of the UK. There's a bit of a scramble to see who they got. I had a look. Boris was flying back, but apparently he's not putting his hand in the ring again. Aussie just squeezing a little bit higher, but Aussie's so overdone. All right, we've got some inflation numbers coming out of Australia this week, which will be very important to what happens next for the RBA, and the Kiwi just tinkering away there. Now, dollar CAD, it started drifting sideways at the end of last week. I know it's just drifting lower, but oil's not doing much, and you're seeing a little bit of dollar weakness there as well. So it's not exactly clear to me. I like the if I just blew up dollar yen here, right? I'm super keen on dollar euro. Like coming into the week, we got the ECB interest rate meeting. I think it's Thursday. It's going to be like prime time, and primarily because it's been behaving very well. You got support and resistance. You got, say, 1, 2 coming up with the third touch downside. Top side, it's got plenty. It's going to be the best, like the best technical looking pair I can see. And it's the biggest major, right? So it's got to be on your radar. Whereas, you know what, if you're looking at sterling, well, it's a bit of a dog's breakfast. We've got the Bank of Canada rate meeting later in the week as well. So that's something to keep a focus on. But right now, once again, you're looking at dollar yen. Now, let me just come into the yen. Now, if I'm looking at yen on sort of 4 different time frames, you can see how what a mess it is. Now, traders globally, professional traders, steer away from this stuff, right? Or they would be looking to get, like, try and find a level where it goes back, because that most of them would know once the BoJ is finished, and particularly the Asian session, right? Once they walk away, this thing goes back to where it was. Now, I was sort of saying on the 247 trade zone there, what do they need to do? They need to break its back. And what I mean by that, they need to trigger big long-term support levels. But if you look at the daily chart here, and I'll just blow this up, you're going to see that they're miles away, right? This first level here, 140, 160, it's another 700 points away. And then below that, you're in the middle of the cloud, 139. So to me, right now, what we're seeing, it hasn't been confirmed that it's the BoJ. You would suspect something. And what they can do, there's two things they can do. Right, and I've been working in Tokyo, Citibank Tokyo, in the sort of mid to late 90s. So the central bank will ring all the banks and go, give me a price check on dollar yen. So what they're doing is they call all the banks, which tells all the banks, be aware, we are on alert, right? And they actually don't even touch the currency. They don't do anything. And what they do is they get that initial move, what they are, because all the banks are like, BoJ's calling here. And they're only calling for one thing, right? To potentially intervene. So that's what we get. So maybe the BoJ hasn't actually spent any money yet. Second thing they'll do is, and you get a big move, which is usually about 10 cents. So that's why I think they've just called around, is they call up and they go, give me a price in dollar yen, and they start selling. They start hitting all the banks. And then what they want the banks to do is they get on the phone to all the big corporate clients and they go, we've got the central bank selling here. And then it snowballs. Then it hits the news wires. Then it's a massive event. I'd say right now they've just called around and checked some prices. We've seen a bit of it's a political stunt, as I'm saying. The government would be putting pressure on the head of the BoJ, do something. Right? We've got to be seen to be doing something. You know, internationally, we look a bit silly because our currency is depreciating, which is great, but it doesn't look good. So anyway, that's where we are on dollar yen. So the main thing is, you have a look at dollar yen here, right? It's very hard to sort of be putting your hand on your heart and saying, okay, I really like this position, like, because you're going to see the same price action here. There's dollar yen, Aussie yen's the same. It's not good, right? Kiwi yen, euro yen, sterling yen, and old CAD yen. We've lost a bit of the pricing there, but you can see here, it is not easy. It's not a clear-cut move down through the cloud. So just be aware. It might look great because you're seeing a lot of instruments move. That's because there's not much liquidity and there's no levels, right? So you might get in, but I tell you what, trying to manage the risk around that is absolutely problematic. All right, so that's where we are. So when I come back to the screens, I'm like, yeah, this is great. I can see what's going on. It's always good to see. I mean, we haven't had a big sort of Monday shift in anything for a while. So we're seeing it. Like, just isolate, and it's personal preference, right? My personal preference is looking at euro, hasn't been bashed up like sterling's been getting bashed up. Aussie's under pressure, right? Big chance here. This is where you start to sort of overlap the fundamentals with what's happening technically, right? And actually, while I'm there, I'll just go through that because this is something that you really need to focus on. Right, so let's just come over here to the calendars now. I'm just using trading economics, and I've clicked on the high impacting stuff. So the IFO business climate numbers Tuesday, okay, big numbers. I mean, they're good historical numbers, gives you a bit of a lead in to what could potentially be happening later in the week. Might give euro a bit of a kick in the belly, but I tell you what, it's really going to come down to the ECB interest rate decision Thursday. So maybe the market waits for that. But the IFO numbers, the GfK consumer confidence numbers out of Germany, usually sort of, pretty good indication of what's happening in the economy. We've got CPI numbers here in Australia on Wednesday. As I said, this is where you connect the dots. Aussie's been under pressure, slightly breaking resistance. Big chance. I think the next, I just come back to the charts there. Big chance here. If you're looking at where's the next level, you're looking right up here, 66.5. That's almost 300 points away, right? So really strong inflation numbers there give us a big chance for a spike higher. Weaker numbers, well, it's back into what it's sort of currently doing. I'm not getting hugely excited about that. So then so Wednesday, that's the Aussie's going to be focused. Now you're coming into Thursday, right? You get the Bank of Canada, right? Well, that's actually sort of Wednesday, but then Thursday you've got the ECB. They're the sort of two major, obviously, central bank activities. You get a bit of data in between here as well. There's some housing numbers. If you went into the lower tier numbers, you'd find some housing numbers and personal income numbers there. So I actually do this. I'm just using trading economics just to get the a picture here. So if I drop that back just to 2, it gives me the medium and high impacting numbers. So then you scroll through your calendar and you can sort of isolate some of the the S&P numbers, building permits, new home sales. I think you've got durable goods there out of the States as well. Some good second tier numbers to potentially give the dollar a bit of a bounce around as we head towards the start of a new month next week, right? So, but because there's not like the massive head kicker US numbers, Aussie inflation will be important. Obviously, the Bank of Canada and the ECB. We may have some direction, short-term direction, whilst the dollar is just taking a bit of a nap. We may get some movement if we get some strong numbers, right? The main thing will be waiting to hear what the ECB are going to come out with following their meeting, right? That's what we're sort of waiting for. The ECB is the sort of dark horse. The consensus is they're going to be raising interest rates by 0.75%. You're looking at these two things here, consensus here. So that's pretty positive, right? But the big thing is going to be the Q&A and the press conference. If they come out and go by 0.75 and then go, you know what, we really need to start catching up with the global markets, then we may see euro sort of pop to the top side. I don't think they'll do that because they don't want to scare the market, but that's sort of where we are at this point. Now, this is where, like, I'm just using trading economics to sort of find out sort of where everything is. Once I get closer to that, I'll be looking at News Squawk to come in because, once again, you need something. You need the expectations previous, and the range of the forecast is the key part of where you can actually sort of work out exactly where these things are. So, you know what, like trading without understanding the range, and not all the data releases have a range. Like the IFO business numbers here, right? This is where it becomes really important because if the number that comes out, the actual release, is outside the range, that's where you get the significant move. And that's the sort of the final piece of information that you need. Like getting strong or weak numbers is great. It tells you, yeah, it's probably going to go up or go down, but is it really going to sustain the move? That's what the range does. So make sure you are checking that if you have access to News Squawk. And when you're sort of coming down and you're looking at the central banks, obviously the RBA CPI numbers, okay, understanding the range there, very important for, as I said, the move. So what I'm looking for is a really strong number, right? So Aussie CPI quarter on quarter 1.6, 7% year on year. These are the numbers here. I'd like to see these numbers blown out, whether it's quarter on quarter or year on year. So if we get a 7.5 there, it's above the forecast, above the range. That's where the Aussie starts to spike 100 points, right? That's the sort of those left field numbers. Everyone's looking for these big moves, but you don't know where to look. But this is where you look for them. And then you come into the Bank of Canada, having a look at the estimated range forecast for change of interest rates, okay, is very important. And obviously for the ECB, as you get into Thursday's numbers there as well. So make sure you do spend some time, do the prep before the releases. And if you're trying to trade central bank announcements, well, I tell you what, it's tricky. The main thing is if it's a line ball call regarding interest rates, interest rate change, that's where it could be a trading event. But outside of that, you can actually come under a huge amount of pressure there. So the expected forecast 0.75 from the ECB. Okay, so they could go more, they could go less, but that's what's in the market. So make sure you understand that. And there's the general range of the forecast expectations. So it's pretty good, right? Not usually the last week of the month we have central bank announcements. Now we've got to try and overlap that in with what the BoJ is dishing up. And that's something else that sort of makes us think, right? You've got to think. This isn't just about turning on your screens and looking to see, what's moving up and moving down. I think this week, right, we could see, as I said, there's no major, really head kicker US numbers. This is the week where we might see the US equity markets rally, right, before we get into next week's non-farm payrolls and we start the big numbers again. So it could be a good week. So risk on, okay. That means, okay, the crypto is going up as well. You'd expect like the euro, sterling, Aussie, Kiwi to be rallying here, all rallying. But I tell you what, the BoJ sort of rumored intervention is sort of messing around with things at the moment. The market just doesn't know what to do, right? It hasn't been confirmed that it's the BoJ. As I said, I reckon they're just ringing around, sort of putting a scare in the market. They don't want to be spending money because they put $1 billion into the market. It just bounces back. Now they're short dollar yen and it's 300 points higher. They've probably lost, 500 million. So that's what you got to look for. So coming into Mondays, once again, just get systematic with your approach, right? The smartest thing you can do is just draw your trend lines, right? I've got some trend lines here that I'm looking at, and this is the global markets. As I said, euro to me, all I'm doing is drawing trend lines and going, yeah, right, that's got a good setup. Is there any major data coming out in Europe this week? Boom, I'll go and find it, and then I can sort of prepare for maybe a stronger or weaker euro, and that's what I'll be doing there. Gold, well, it's mid-range, but it's had a nice bounce with this sort of rumored BoJ intervention. I'll tell you what, this is what you can be looking for is if that's denied by the BoJ, that falls straight back down. Okay. For some reason, I got the wrong color pen there. Straight back down. If that is denied, and you'll probably find them trying to get hold of the BoJ. You can see the Dow Jones futures there sort of moving topside. Okay, that's a real risk-on profile. It should give support to Aussie, Kiwi, and CAD, like dollar CAD lower. See how that plays out. Don't forget, this is Monday, right? It's not the best time to be trading. Illiquid conditions, it's tricky at the best of times. Last thing you need to be doing is throwing some good cash around, trying to chase your tail, looking for a few bucks on a Monday. It's not the professional way to do it, right? I don't want to stop you doing it, but I'm just saying the outcome will be random, right? And if you get one right, you think, oh, okay, this is good. This is the market I've been looking for. There'll be won't be long before you dig a big hole, if I can get that out. And you're sort of like scratching your head, wondering what happened. All right, so that's where we are, guys. It's an interesting week, more so because of the BoJ. As I said, if you're looking for any sort of ideas of what to do, keep an eye on the yen crosses. To me, they are such a mess. I can't really say to you, hey, get short dollar yen or the yen crosses because it's random, right? It's broken levels. It's been up and down through there 5 or 6 times. It doesn't make sense. So if it doesn't make sense, I don't generally trade it. All right, guys, that's it from me. Good to be back online. I'll be doing the week ahead sort of wraps on Monday, try and give you a bit of insight into what's coming on, get yourself prepared. The main aim of trading is identifying the technical side of things, right? That's one part of it, but understanding when the market is going to kick into gear, right? And that's what you're preparing for. Spending endless hours in front of the screens, say, waiting for, say, euro to go up or down here is absolutely stupid, right? We know when the big numbers are coming out. That's when the most likely time momentum will shift or you see a big move. So you keep an eye on things and then you get to the screens ready, anticipating potential opportunities around those big events, right? And that's the way it generally works. All right, guys, that's it from me. Have a good one and have a good week. Cheerio.